So what lies ahead for the Indian wealth management space? Has the best played out? Is it only the beginning, or are we in the middle of the cycle? Well, let's put that question to Feroze Azeez, Joint CEO, Anand Rathi Wealth. Gentlemen, good morning. And for me, it's very special to have both of you on at our 9:30 corporate slot because, all of us have been discussing wealth management and money-making ideas, the wealth creation journey for close to a decade, right, on our personal finance shows. But here we are talking about your business because it has hit such headlines. Let's bring in Feroze as well. Feroze, so good to speak to you on the 9:30 news, like Ashish is saying, right? Not just let's talk money. But again, the question is, isn't the space also getting very, very crowded? There are foreign banks that are really pushing forward with their private banking businesses. Everybody wants a piece of the pie, which has been dominated by Indian outfits like yourselves. What about margins and profitability metrics from here on?
Also, my voice is a little bad, but I'm going to try. Of course, it's always a pleasure, irrespective of the time, to talk to you. Point one is I think the wealth management industry is going to be dependent on the economy, right? If you want to play the India story, wealth management is definitely one of the pieces you will look at, point one. Point two, like Ashish said, there is going to be tailwind, but there are some challenges in the wealth management industry as well. Attrition is one of the largest challenges. Anybody who's been able to solve it is who will have a gathering mass, because rolling stones gather no mass. So the kind of attrition wealth management industry has been seeing historically, that needs to change. That's point two. Point three, you said everybody wants a pie, a share of the pie, but it doesn't happen that way. If you look at 10 years back, I'll read out some numbers. 2014, if you look at the top 10 mutual fund distributors as a proxy of the wealth management industry, you would see three MNC players: Citi, Hong Kong, HSBC, and you would also see Deutsche in the list of mutual fund distributors. Today, you don't see any MNCs in the top 10 distribution. Indians are relying on Indian names. That's one clear trend which is emerging. I personally think the regulatory framework and the evolution of the regulatory framework is behind us. So the regulatory risk over the next 10 years is far lower than it was in the rear view mirror. So these are some of the challenges, but I think it's a big, big, big opportunity. If you want to play wealth management industry, which is a part of the Nifty Capital Market Index, that's a more broad-based thing than just a specific wealth management part of the value chain.
Feroze, two questions to you. One is, do you have to go down the sort of wealth curve? I mean, the top end is, I guess, where you make a lot of the money. I mean, now I spoke to a player, a large conglomerate, which is entering wealth management. And I said, well, what segment are you targeting? He said, well, it's open. We're going to be offering our services to whoever wants it. So that is there. So is that happening? Are you also forced, are you and the established players also forced to do it? Sort of move away from the really top end, right? And second is how the attractiveness for investors in your companies, of course, is the fact that once customers come on board, they're kind of sticky, more sticky at least compared to, say, mutual funds or other products. So just talk about that aspect as well. Go on, Feroze.
Good morning, Prashant. If you look at our strategy, we think that a company can't be everything to everyone. A focused strategy is very, very critical. So for the last 17, 18 years, we have been existing. We've always focused on the HNI, not even the ultra HNI segment. There's very few players who have a cap on the clients whom they go irrespective of size. So we went between HNI, but not the really large ones. So our belief is any business should try and not be catering to everyone. You have to specialize if you have to create a niche. That's point one. Point two, I personally think we will not be forced to do it, because by design, most who are mass affluent become HNI over a period of time. If you look at last year's, where we have already given our results, so I can speak of it, we made 9% average return for all our clients in a bad year. So that is implied growth without having to bring one new client on one new check. That is the key. If you have implied growths in a business of 9-10%, which implies that the revenues go up automatically by 9-10%, I have to work for the next 10% of my guidance, not for the full 20-25%. So that's what I think is the key differential in the wealth management industry. So I don't think every player will operate very differently. They will reach different destinations in the 10-year period. unlike other industries where the fates are joined at the hip, I think here, bottom up, strategy will decide what the fate of that business is, not just the industry. Because in the same India, there is one portfolio last year which delivered minus 32% return. There's another portfolio which generated plus 20% return. The macro environment for everyone is same. The Nifty is same. So what depends on is what's your mathematics to create a portfolio and what value you add to the client, rather than which industry you're going to be in or which segment you're going to be in.
Feroze, very quickly, you brought up the point of attrition. And, you see on social media all kinds of takes on how well paid wealth management executives themselves are. I mean, even lower down the ranks in the chain. Would this be, given the multiples the market is willing to give, will we see more deals? Is it a good time to maybe offload some equity in the wealth business, shore up on capital to deal with some of these competition issues?
No, I don't think that way, Surabhi, because an RM moving in for short-term gains is not profitable. We did a study of who left Anand Rathi over the last 10 years and benchmarked them to the people who stayed back. And we realized 90% of them were better off as a benchmark, significantly better off. In the wealth management industry, till the RM understands that if he starts moving, the clients stop moving with him. He gets only one chance in life, or two at best, that a client moves with him. I think that will become more and more prominent. But every time the market does well, you have people who want to outbid another person. So Anand Rathi's strategy has been train them inwards. Okay, so I train 480 people as we speak to make them RMs. So that's how attrition can be. If I buy it from somebody, my army, somebody else can buy it out from me. So that can't be a strategy. Buy and build a business can't be. It has to be built brick by brick. That's one. Your question on capital, I think this is the least capital intensive business. So ROEs can be very high. Unless you have a conglomerate with an NBFC business, then you need capital.
No, more from a value unlocking perspective. I mean, the business doesn't need capital, but a good time to. I was asking from a more value unlocking perspective, from a promoter perspective.
So I think the promoter should ride the run for the next 20 years. If we believe in India, I don't think a promoter. I shored up for myself more equity in the last quarter as visible on BSE. So I bought in my wife's name a couple of lakh shares. So I would.
Feroze, how much? How should the wealth management business be valued? We've got the example of UBS 361. That's been done at about 1.2% of assets. What should be the? Is that the fair one? Should that be the benchmark?
Prashant, in my belief, assets is the most fluid way of measuring it. Some people even count their demat holdings of a client a tax-free bond. So assets is the most unregulated number ever in a wealth management industry. If it is an asset management company, assets are clearly demarked and you have them in your custody using an RTA. So in asset management, I think it's a backward calculation of what was the yield. So I personally think this UBS deal is a bigger message saying that a foreign player will need an Indian partner. Now, Karan sir has been running this wealth management business for the last 18 years. He understands the pulse of India. So MNC is clearly giving a message that you can't go standalone. Several people have tried this. Again, there will be bouts of people wanting to try it. And if you go the full last 25 years to understand India and India's psyche, you can't sit in a foreign country because India is going to be a second decimal number. When 2008 happened, I used to work for RBS. And when crisis happens, wealth management outfits, foreigners pull out during the worst time for the client because that's when the client needs us the most. But the promoter is selling stake in 2008. That's what happened to me. That's why I chose not to work for an MNC. So that's a great message from UBS by doing the